Hey guys, this week we're going to talk about if the market is going to crash or not. So let's take a look at August and April. So when we had a crash in August over here, it was roughly a 16% crash in the S&P 500. And the one in August, we had roughly another 18% drop. And so are we going to get another one of this week? Dropping that's another 18% drop. We're likely looking at 15% drop, looking at 340, which is going to make a new low. Yeah, so far I don't see that happening. So now let's dive deep into some of the technical analysis of determining what's the probability of that happening. So let's look at the weekly chart right now. So essentially we have 8 weeks of stair-stepping patterns. Stair-stepping pattern means that the weekly low of the close is higher than the previous week of the close. So meaning that this low is higher than this week's low. This week's low is higher than this week's low. This week's low is higher than this week's low. This week's low is higher than this week's low. So we have been going literally straight up for 8 weeks. And most of the traders are essentially looking for a weekly consolidation. A consolidation means that the current week's low of the close needs to be lower than the previous week. Essentially, we need to go lower than last week's low for this week's new candle once this week starts. And then the market can decide where it wants to go after that. So essentially, we need a 1 week close lower than that for it to call a weekly consolidation. Most traders are hedging with lots of puts this week. But market can also cool off, essentially just going sideways. So we can also get sideways action, which this is exactly what I've been getting for the last 2 weeks. You can see that the past 2 weeks for S&P 500 is pretty much an inside bar and an inside bar. We're literally just going straight sideways. So if we get another week, let's take another inside bar, and the market just kind of cools off, it is very likely that we could get a rally, another leg up before it wants to start its consolidation. Now, based on the price action right now, I'm leaning more bullish because after popping this hard, we are still in a bull flag territory. So what I'm talking about is that so you guys can look at this is QQQ. You can see the Fibonacci retracement of the current move from this is A to B. So from A to B, this entire move, we have only retraced roughly maybe 30%. So as long as we're above the 38.2% retracement, it's a bull flag. So we can literally just chop around in this area and then boom, another leg up. So what I want to see going forward is the bears increasing their volumes if they really want to bring this down and lower. So far, we're not seeing that because as you guys can see, let's take a look at the Thursday and Friday's action. So I'm going to go to the hourly chart and you guys can see here. So I had an SQQQ position open and I held through this consolidation. I opened it over here and I held through this consolidation. And I should have took a profit here, but I did not. But so when Bolar said this is the PPI reaction, we had a hot PPI, we had dropped in the pre-market and it just got bought up. And then this hourly candle was when Bolar said that we're going to have a 50 basis point, possible of having still a 50 basis point hike on March. That's still on the table. What I believe that if we didn't have a hot PPI data, market would have just shrugged it off like the past month and a half when the Fed just keep talking about all this hikes and being hawkish, all that stuff. Market just didn't really care because we've been hearing that for the past year and a half, and we just numb to it. We know that the Fed just trying to talk hard on us to not get the market up. So if it wasn't for this actual data that we got this week, the hot CPI and hot PPI, I don't think the market would have cared. But since we got those two datas, the market had a little bit of fear. So we had literally a waterfall drop in the last hour of trading. and Friday we followed through a little bit during the pre-market. But what I noticed was that it was a very slow grind down. There was not a lot of fear in the market, and you can see like other sectors such as Dow that was green by the end of the day, that was up 0.4%, and S&P 500. There's a lot of sectors in the S&P 500 that was actually green. So you can see that we only dropped 0.25%, which is literally nothing. You can see the financial sector was green, the consumer discretionary sector was green, and some of these defensive sector was green as well. So utilities, consumer staples, healthcare was all green. So you can see a rotation in the market. So when there's a rotation in the market, it means that there is not a lot of fear in the market. It just means that money is rotating around in the sectors. So money is not leaving the market. And so when you see essentially see that, plus we had a strong bounce into the close here, I sold my short when around this area, right when we broke bull from the consolidation here, and I am all cash at the moment. So if I wanted to go bear again, I wanted to see a kind of like drop that we had like on Thursday. This kind of a move with increasing bear volume. See how this volume candle increasing as we drop. Look at, and then you look on Friday. It's like a short little consolidation, and with not a lot of volume compared to this kind of a bear volume. And so what I'm looking for next week is that if we get a bull move back above this range. So we get a bull move back into this range with candles. I'm likely leaning a little bit more bullish, and anything could change. We could get the CPI data on the March 14th, I believe, and it could be another hot data. If we get another hot data with two hot datas coming in, the market could drop. The Fed could, said they're going to start actually increase more rates. But as for now, there is none of that. So currently, I am looking slightly more bullish, and I'll likely be looking for a position in TQQQ, which is the 3x leverage ETF for QQQ on the bull side. So meaning if QQQ goes up 1%, the leverage ETF 3x for TQQQ would go up 3%. And yeah, I'll just set a type stop loss below. Here's how it works. I will go to the daily chart. Just gonna delete these real quick. Back to the daily chart. So essentially, if we do break above this black trend line again, where is it? Right here. Yeah. So if we do break above this black trend line, I'm likely gonna go bull, and I'm setting a stop loss right under it. So if on Tuesday we break out with some decent notable volume, I go bull and I set a stop loss under here. And if we like go up here and then we break back down, I'll likely go to short. And then if we break down below here, I'll likely continue to hold my short. And that would mean that we're going to have started actual weekly consolidation. But as of now, there is no signs of bear volume. So I will be leaning towards more bullish and be watching this level next week. Sorry, tomorrow. And yeah, we'll go from there, and we'll update you guys end of the week, or I'll update you guys on Tuesday actually, and see how the market goes.